All right, everybody, what's up? Good evening, all. How you guys all doing tonight? What's up, everybody? Hey, yo! What's up, guys? My TGD fam, how's everybody doing tonight? Small cap, what up? Alex, Travis, Danny, Sean Miller in the house, Glenn Wilson, William, Sam Gold. What's up, Sam? Chris Botsis, Judy. I hope we're getting closer to that bet, Judy. I hope we're getting closer to that bet because this coronavirus is going to be gone sooner than later. You better make me pay up on that bet, Judy. Salah, Martin, what's up? JD Seafood in the house. Great job today trading. Rodrigo, what's up? Bradley, Maria, R. Hirsch, my man, never misses a stream. Chris 305, what's up? Thomas, Rob Massive, Rudro, Rudro, what's up, Rudro? Paul, what's up? Yes, Paul, thank you, man. I am. I feel so much better, Paul. I really do, man. Thank you. Thank you. Renzo Lopez, what's up? Ricky Jennings. Fausto, what's up, man? I hope you're well, Fausto. I hope you're well. Nice. Pete W. just finished the tax course. Now just needs one more final to be TGD certified. Yo, Richie Scalia, what's up, man? Snowalv, what's going on? Yes, Billy. Dr. Spuds in the house. Flip. Robert Williams says, what's up, fam? Let's get it. What's up, Robert? Yes, Maria, I do. I feel so much better today. Yeah, I felt better yesterday too, but I still wasn't 100%. I feel really good today. Like my voice is just a little scratchy still, or like my throat's a little scratchy, but I feel a lot better. Like I don't have a fever anymore. Taking the antibiotics. I mean, I feel good. And I'm 3 for 3 since I've been back. So, I mean, what a way to come back. I was sick for a couple of days. Was not coronavirus. I was just sick. I had strep throat. But it feels good to be back, and so far I'm 3 for 3 since I've been back. So just kind of picking things right back up, and I couldn't have asked for a better way to kind of get the ball rolling again and start really getting back into trading. And we've got some really good action so far in small caps today. Grnq, beast. MICT gave us a nice move in the morning. The stock died out completely later in the day, but was a really nice trade early in the morning. And I actually made most of my money today in MICT, not even Grnq. I left a lot of profit on the table in Grnq. Like I said, made most of my money in MICT, a 21% gain on MICT. And then that's where the bulk of my profits were. In Grnq, I just kind of added to the day. So we've got a nice little live stream to talk to you guys about. I want to recap these two trades for you. Two very, very good trades, solid trades, good profit on both. But MICT was bigger than the other. So we're going to recap those two trades. Then I want to talk to you guys, a lesson that I want to cover with you, aside from obviously recapping the two winning trades and going over the setup and the analysis and the execution of those trades, obviously the entry, the stop loss, the take profits. Aside from the lessons covered on those two trades, I want to talk to you guys about risk management when it comes to super high volatile stocks that are halting, because there's a really good risk management lesson regarding Kodak from today that I want to talk to you guys about. I probably saved tens of thousands, if not hundreds of thousands of dollars between all of our members in chat. Saved them a lot of money today from making what could have been a deadly mistake on KODK when there was a news headline that came across the wire and some rumors about KODK, maybe being cleared of the investigation that was going on with the company, and the stock just exploded like a bat out of hell as soon as that news hit the wire, and it started halting. And it was very, very volatile. The stock was moving around like crazy. And there is some very specific risk management with that I want to talk to you guys about, because I I stayed away from the trade. I didn't trade it. I told all of our members to be careful to stay away from it. And then the stock just absolutely got slaughtered, halted on the way down, gap down, halt, gap down. I mean, people got crushed on that trade. And I'm happy that not a single one of our TGD members were in that because of the risk management lesson that I was talking them through on the mic. And I want to talk to you guys about that risk management lesson here on this live stream tonight. So we have a lot to talk about. As always, I'm excited to get down to business with you guys. What I will do, same way I start off every live stream, you guys know it, open floor Q&A session. Give some people some time to log on. I'll take like a couple of questions for 15, 20 minutes. Then we'll get into the trade recaps. Then we're going to get into the lesson on risk management. So I will fire away, guys, ask away with some questions. I'll take one question right away. I just saw somebody who asked a question a couple of minutes ago, said that this is their very first stream with us. Congratulations on, welcome to the family. Before I start, how many of you guys are brand new? How many of you, this is your first time on the TTG YouTube channel? How many of you guys, this is your first time on the True Trading Group YouTube channel? Just show of hands if this is your first time. All right, Kevin, D. Lee Larson, Dr. Joseph, Devils, Dre Battle. Yo, that barber can cut. I'm going to need you, bro. If you're in Miami or New York, I'm going to need you. All right, we got a lot of new faces. Tim, Mike, Raymond, beautiful. Sadek, Jason, Jameen, Robert, Gogo, Tejas, James, Dill. Beautiful. Beautiful. Bammy, Bob, Rudro. I love it. Claire. I love it, guys. Beautiful. Non-Beastly. Toko Heaven. Excellent. Great. Guys, listen, all of you that are brand new, all of you, this is your very first time, coming to a True Trading Group live stream. You guys are in for a serious treat. The first thing you guys are all going to want to do is you're going to want to subscribe to the channel right now, because these live streams, these Q&As, these live lessons, I do these on a regular basis. If I'm not doing a live stream, I'm posting videos with technical and mental lessons for free on a daily basis. You guys are going to want to make sure you subscribe to the channel. For those of you that are brand new to the channel, quick 45-second kind of intro to who I am. Those of you that have been following my channel for a while, you guys know me. You hear my voice basically every damn day. But for those of you that this is your very first time on a TTG YouTube channel, you might want to know, well, who the hell am I? Guys, my name's Michael Edward. I'm the head trader for True Trading Group, and I started my career right out of college trading, working for a hedge fund on Wall Street. We managed about $500 million. I went through a 3-month educational program while at that hedge fund, went on to receive a Trader of the Year award in 2008. Fast forward 2009, after the Great Recession, stock market crash of 08, 09, the subprime mortgage mess, 50% of all hedge funds went out of business, including mine. Okay, so my hedge fund closed in 2009, became a prop trading firm, and I, thought I was going to be able to find another job at a hedge fund, but since 50% of them all closed, fast forward now, 16 years later of me being an active trader, and here I am now, head trader of True Trading Group, and that's kind of the quick 30,000 square foot overview. And now at TTG, the 3-month educational program that I went through at the hedge fund, I've simplified that material, and that's what I teach all of our members. So for those of you that are brand new, welcome. You guys are in for a serious treat. You're super lucky that you guys have found us tonight. We're going to get into a lot of stuff, okay? So subscribe to the channel. All of the rest of you, before I get into my Q&As, guys, do me a solid. All of you right now, smash that like button, guys, for me. Let me know how much you appreciate these live streams. 8:45 at night. I'd love to be laying in bed watching Netflix or at the gym working out, but I'd rather be on here talking to you guys, going over some lessons to see how we can make you guys some better and more consistently profitable traders. So do me that solid, smash that like button. You're also going to want to share this live stream. Share this stream on Twitter. Share it on Facebook. We're streaming right now on multiple social media platforms. We're live on YouTube. We're live on Facebook. We're live on Twitch. So you guys want to do me that favor and share this stream. Let's reach as many traders as we can so we can help as many traders as we can. All right, guys, so do me that solid. Now, first question that I'm going to answer. I saw someone, we're going probably a few minutes back now, that I want to answer this one question because I saw it pop up, and somebody said, hey, my first time here, why do you use 3-minute charts? Let me explain to you guys why I use a 3-minute chart. And I don't only use a 3-minute chart. Okay. When I am trading throughout the day, I use multiple time frames. I use a 3-minute, a 5-minute, a 15-minute, sometimes an hourly, rarely though, and a daily and weekly chart. Those are the time frames that I use. Again, 3-minute, 5-minute, 15-minute, once in a blue, an hourly. Well, I can even take that one out. We'll make it easy. 5 time frames: 3-minute, 5-minute, 15-minute, daily, weekly. Those are the time frame charts that I use. All right. I will use the 5, 15, daily, weekly to identify levels, to identify patterns, to identify setups. When it comes time for me to actually be pulling the trigger on a trade, it's the 3-minute chart that I rely on. And the reason why, and I'm assuming the reason why you're asking me, why do I use a 3-minute? I'm sure the rest of your question is instead of a 1-minute, because you probably see a lot of traders on YouTube that use 1-minute candles. And I'm here to tell you guys that I don't use 1-minute candles. I never use 1-minute candles, never have, never will. I never suggest anybody uses 1-minute candles unless you are a micro scalper. Now, what is a micro scalper? A micro scalper is somebody that is in and out of trades within seconds. If you're buying a stock and you're selling it within 30 seconds, 10 seconds, you're selling it in a minute, if that's your trading style, then yes, you should be using 1-minute candles. Okay. That is not my trading style. I'm a traditional day trader. I also do swing trade. My trades last several minutes to several hours long. And then when I swing trade, obviously several days. But my day trades are not 30-second scalps. They're not 1-minute scalps. My day trades are several minutes to several hours long because I'm trying to catch a general overall momentum-based move and a directional move on a stock during the day. So that's why I don't use 1-minute candles. 1-minute candles for me, okay, me personally, 1-minute candles are way too noisy and they give you way too many false signals. So unless you're trying to actually capitalize on price action within 1 minute, you should not be using 1-minute candles. Okay, they will drive you crazy. You will get false signals. Okay, you'll get a lot of false signals. You're gonna be, okay, this looks like a breakout. It's not. It gets stuffed. This looks like a breakdown. It's not. It holds. It bounces and recovers. It's just too much noise and too many false signals. So I don't use 3-minute candles. Like I said, if you are not a micro scalper, if you are not someone that's getting in and out of trades within seconds, then you also should not be using a 1-minute candle. That's my opinion. I don't teach any of my teaching members to use 1-minute candles because, like I said, I'm not a scalper. Okay, so that's why I do not use 1-minute candles. Okay. Deister says, what about 2 minutes? Yeah, listen, 2 minutes, it's better than the 1 minute. It's not as good as the 3-minute, in my opinion. I know that I think there's some charting platforms that don't have a 3-minute option. I'm assuming, Deister, that's why you're asking that question. Maybe your charting platform doesn't allow for a 3-minute. If that's the case, then you got to go with the 2-minute and then rely on the 2-minute and the 5-minute. Use both. Okay, use the 2-minute and use the 5-minute, and then use both of those time frames almost side by side. Like I've got a 4 time frame set up on TC2000. I'll show you guys here. See this tab down here? It says 4 time frame. When you click on 4 time frame, well, because this is my laptop, so this is going to be, the sizing of this is going to be skewed a little bit. I'll just adjust this so you guys can see. Okay, but as you guys can see here, I've got 4 different time frames all on one screen. Okay, so we have 3-minute to the top left, 5-minute to the top right, 15-minute to the bottom left, and then daily on your bottom right. Okay, and then daily on your bottom right. So I would suggest, if you do not have access, all right, to the like a 3-minute chart, then I would say go with the 2 and the 5. Okay, let's see. Nope. Nope. The wolf's not here tonight, guys. Let's see. Next question. Let me take another question. No, I do not use the Heiken Akashi. I definitely just did not pronounce that right. Candles. No, Jameen Fletcher, I do not. I use traditional price action candles. All right. Danny says, Mike, two questions. One, is Roku forming a Head and Shoulders on the daily? And two, I had two tokens this morning and I used them and didn't receive a link, and now they're both gone. Any help? Danny, um, if you did not receive a link and your tokens are gone, Danny, send an email to info@truetradinggroup.com. All right, send an email to info@truetradinggroup.com and just let them know about the issue that you're having, and we'll get that resolved with your token for TGD Tuesday. But your first question is Roku forming a Head and Shoulders on the daily. I don't see a Head and Shoulders. If you're referring to, I'm assuming what you're referring to, I'll just draw it out for you, is left shoulder, head, right shoulder, neckline. All right, so I'm assuming this is what you are. I'm assuming this is what you are looking at. Okay, I'm assuming that's what you're looking at. I mean, can you say that that's a Head and Shoulders? I mean, I think it's a stretch. I think it's a stretch. I really wouldn't call that a Head and Shoulders. I think that's too sloppy of a pattern. To be honest with you, I think that's just too sloppy of a pattern. So I really wouldn't call that. I really wouldn't call that a Head and Shoulders. James, would anyone recommend day trading for dummies as a start to day trading? No. If you're talking about like the book, James, like day trading for dummies, no, I wouldn't. For beginner day traders, what I suggest to you guys is make sure that you receive a professional education. Okay. If you are a beginner trader, so whenever we have a new trader that signs up to TTG and they're like, okay, Mike, I'm ready to do this. I'm brand new. I don't know what I'm doing. The very first thing that I say to them is forget about opening a brokerage account with real money. I want you to go through our courses, learn the material, take the quizzes, take the exams, get TTG certified, ask questions, spend time in chat, attend our workshops and webinars that are for all of our members. It's all included in your membership, but use our simulator. Okay, use our simulator. All right. I want you guys to use our trade simulator. It's real-time level 1, real-time level 2. Okay. You can trade stocks and options. Use the simulator until you get to at least a 50% win rate, and then switch back and then go to real money and then start trading. Why start trading with real money if you don't know what you're doing yet? Trade with fake money while you learn and get a professional education and the foundation of what I learned. Like when I got hired at the hedge fund, I didn't know how to trade. They taught me how to trade. I was a kid. I was just coming right out of college. I had no idea what I was doing. Okay. I had no idea what I was doing. So that was, they taught me everything that I know. So it's important for you to, in the very beginning, get a professional education so that you build good habits. What a lot of time happens with inexperienced traders is that, for example, like they'll go online, they'll go on the internet, they search, they look for a bunch of stuff, they find a bunch of gurus or furus, whatever you want to call them, and they like try to like pick a little something from everyone's trading strategy, and it just becomes too overwhelming, and they're trying to put a piece of different strategies together to form their own, and it doesn't work because like you might be looking at 5 different traders and saying to yourself, okay, I'm going to take something from this trader, something from this trader, something from this trader, and you're going to try to form your own. That does not work. It's like if I said to you, okay, here's a puzzle of the Statue of Liberty, and we're going to dump that puzzle on the table. Then I'm going to say, well, here's a statue, here's a puzzle of the Eiffel Tower. We're going to dump that on the table. And I said, okay, take pieces from both puzzle and try to form one. It's not going to work. Okay, the pieces are not going to fit. So this is a mistake that a lot of new and inexperienced traders make, not realizing how many different styles and strategies that there really are out there for day trading. So you don't want to learn a gimmick. You don't want to learn like someone's little gimmick. You want to learn a real professional strategy and professional trading so that you can apply that to various trading styles and strategies. Okay. So I would not recommend. I mean, I've never read. If this is a book, I never even heard of this, Day Trading for Dummies. If this is a book, I have no idea if it's a good book or not. But I'm going to assume it's not just by the title of it. I would recommend getting a professional education and then practicing on a simulator before you start trading with real money. Tony says, quick question. Should I swing trade or long term or day trade? What's more profitable? Tony, neither is more profitable than the other. They're just two completely different strategies. So I'm a day trader. I also do swing trade, and I also have a lot of long term investments. I recommend everybody has long term investments. I think everybody needs to be invested in the stock market to build and generate wealth over the course of your life. My long term portfolio positions is something that I share with our members in TTG. When I add to positions, I always share with our members in TTG. I added a lot in my long term portfolio in March and April. A lot of those positions, I'm up 100% on some of those positions. Some of them even more. I mean, these are things that I think everybody needs to do is investing for the long term and have some type of exposure to the stock market. I think it's an absolute must for everybody. But when it comes to day trading versus swing trading, it's not that one is more profitable than the other. It's all about a style and strategy that fits best for you. Some people have extremely hectic lives during the day and they're not able to be sitting in front of their computer for an extended period of time, and swing trading might work better for them. Other people are very uncomfortable holding on to a stock at night when they have no control over it and they get very anxious. They can't sleep at night. And some people don't like having that overnight exposure. So maybe that's not for them and they prefer day trading. It's really just what you prefer as a trader. Now, I will recommend to people when you're a new and inexperienced trader, I will recommend to you to start with one. Don't try to do both in the very, very early stages, in the very beginning of your career. Try to just focus on one of them and get comfortable with one of them, and then diversify and expand your horizons into day trading and swing trading, or swing trading and then day trading, whichever one you decide to go with first. But I think it's important as to be a consistently profitable trader for you to be diversified. And for you to be diversified, it's about asset class, saying, okay, don't just be a one trick pony. Don't only trade small caps. Okay, trade small caps, trade mid caps. If you have a small account, trade options on large caps. Okay, if you have a larger account, trade large caps, ETFs. Like, be a diversified trader, because there's always opportunity somewhere. But certain asset classes and certain sectors get hot and they get cold. And if you're just a one trick pony and you're stuck in that one asset class or that one sector, when that sector or asset class is not in play, you're going to be banging your head against the wall when there's really good opportunity elsewhere. All right. So I think it's important for you to be diversified in that sense, but I think it's also important for you to be diversified and be able to day trade and swing trade depending on the opportunities that present themselves during the day. All right. So I think it's important for you to be able to do both. And that is something that we teach in True Trading Group, is how to do both. So in TTG, we have one moderator, Jay Downing, who actually only specializes in swing trades. Okay, multi-day swing trades. These are swing trades that are specifically geared towards people that work 9 to 5s and can't be in front of their computer. They want to buy a stock today. They want to sell it in 2 or 3 days. Okay, so we have stuff like that is just specifically designed for swing trading. I swing trade. A lot of our other moderators swing trade. It's I think it's important to be able to do both, though. Okay, but neither one is better than the other. It's all about your personal preference. Ooh, good question. Jorge Luis Williams Bosa says, Mike, would you recommend re-entering a trade at your original entry and using your original stop if you got stopped out on the trade and it later reclaims that level? Great question. The short answer is no, and let me explain to you why. All right, the short answer is no. Let me explain why. If you get stopped out of a trade, I recommend and I teach all of our members to not go back into that trade unless the setup has changed. Okay. If you get stopped out of a trade, more often than not, you got to trust that you were right to get stopped out of that trade. And sometimes you're going to get stopped out and then the stock's going to continue higher without you. It's going to happen to you. There's no way around it. Okay. That's going to happen to you sometimes. But more often than not, when you get stopped out, the stock will continue lower. And it will have been the right call to have gotten stopped out and to exit that trade. What I don't want to see happen to you is you get stopped out, then you get back into the stock only to get stopped out again because you were right to stop out when you did the first time, and you just turned one losing trade into two. And that is something that not only is going to damage your P&L because you took two losses instead of one on a full-size position, but now the damage that that's going to do to your mental capital is devastating. It's worse than the damage it's going to do to your actual P&L because you are going to be so pissed off and so frustrated at that moment that you might as well pack it up for the whole rest of the day. You're not going to be able to trade emotion-free. You're not going to be able to be focused. You're not going to be able to go about trading the rest of the day with a clear head. Your emotions are going to be running rampant. You're going to be pissed off. You're going to be frustrated, and it's going to affect your decision-making going forward. And then that mistake, turning one losing trade into two, is now going to affect your decision-making in your next trade, which is then leaving you open and susceptible to more risk, more mistakes, more mental blunders, and taking more losses. So that's why I say, like, the mental capital part of it, it's not worth it. Like, yes, will there be times, Jorge, where you're going to get stopped out and the stock reclaims that level and you could jump back in and the stock does move higher? Yes, that's going to happen. And when you become a more experienced trader, we can talk about times when you can do that, because I do that sometimes. But I've been doing this for 16 years. But if you're an inexperienced trader, it is so much more important for you to establish discipline. Okay, to establish discipline. And if you start doing things like that, get stopped out, jump back in, get stopped out, jump back in, you are going to drive yourself completely mad. Okay, so, the short answer is no, I don't recommend you do that. I might sound like a hypocrite because sometimes I do it, but there are times when it's okay. It makes sense for me to do it, but an inexperienced trader does not have that risk management, wherewithal, and technical analysis to make that call. And it's more important as an inexperienced trader for you to protect that mental capital, stay disciplined, say, if I got stopped out, there's a damn good reason for me to get stopped out, and just own it. Say, okay, I got stopped out, whatever. And then if the trade sets back up for you later in the day with a different pattern and a different setup, and you want to go and trade that stock again, go for it. But don't get stopped out and then jump right back into that trade, because if you take that loss again, I'm telling you, just pack it up for the day, because your mental capital is going to be erased. Kenneth Dixon, Mike, can you talk about summer trading and usually what month it starts and ends? I know a month ago it was a unique time period for small caps, but generally, what should we expect? Summer trading is typically July and August. It's typically July and August. Summertime trading is just, the reason why summertime trading exists is because typically you have lower volume in the summer months in July and August. And the reason why you have lower volume is because traders go on vacation. Like July and August are usually your most heaviliest vacationed months of the year for Americans. Okay? It's when people take vacations. It's when the Wall Street traders, they rent a house in the Hamptons with their family. They go down the shore, they go to the Caribbean, they go to Martha's Vineyard, they go to Cape Cod, they go to Niagara Falls, they go whatever the hell it is that they do. People go on vacation, and the average retail trader goes on vacation. That's typically why you have summertime trading. It's a little bit of a different situation this year because of coronavirus, and you're going to have a lot less people going on vacation. But you still have people that take time away. And even if it's just take a couple days off to like spend some time with their families, maybe take their kids to the park or the zoo or whatever it is, go bike riding, go hiking, like whatever it is, that's just what the normal, the average person, not normal, the average person does during this time of year when the weather is nice around the country and you don't have snow anywhere and it's typically good weather across the country. That's why you get summertime trading, and summertime trading is usually slower, it's usually choppier. You don't get as much follow through, you don't get as much continuation, momentum is lighter because of the lower volume. You can't have follow through momentum with low volume. And since there's less traders that are trading during this time, liquidity and volume is lighter. Okay, and that's typically where you get summertime trading from. Summertime trading usually comes to an end like mid-September, and that's usually because that's when all the kids go back to school. Okay, so no one is going on vacation now because all the kids are going back to school, and that's when you're really almost getting back to like full attendance. Like if you took attendance for all market participants, every single participant in the world that trades a stock, okay, every single participant, whether you're an individual, a hedge fund, a mutual fund, a pension fund, you're an investment bank, you're a prop trading firm, you're an individual retail trader, whatever it is, if we had an attendance sheet, the most people would be out July and August. And then once you get into the fall, that's when you're going to start to get back to like full attendance, if you want to call it. Okay. So that's why you typically have like summertime trading. All right. So, I always like in July, I actually switched up my take profits and I was taking more profit off the table sooner. For those of you that are brand new, I trade in tiers. So when I take profits on winning trades, I sell my position in pieces. So I break my trades up into, let's say I buy 10,000 shares of a stock. My first take profit is going to be 25% of my position. So I'll sell 2,500 shares at my first take profit. My second take profit, I sell 50% of my position. So I'm going to sell 5,000 shares. My final take profit, I sell the last 25%, the final 2,500 shares. In July, when markets were very, very choppy with a lot less follow through, I actually switched that up to be 50% at my first take profit, then 25, 25. I have since gone back to 25, 50, 25 because action has started to improve a little bit. So I am back to 25, 50, 25. But we'll see how that goes the next couple of weeks. And then you get back into September. And I think by September, October, I think we're going to get some pretty good action. Then you have the election, which, all the debates, and you're going to have the markets might react, depending on who's leading in the polls and what's going on. Maybe you're going to get some China headlines. You're going to get vaccine news. There's going to be a lot of things that are going to be, there are a lot of headlines that are going to be coming out this fall because we're supposed to have in the fall a lot of these companies that are working on trials like Moderna, Pfizer, AstraZeneca. You have a lot of companies that are at that phase 3 trial period with their vaccine. And you had a couple of companies already say that they plan on submitting their FDA application, which would mean they're completed phase 3. They're submitting an application to the FDA by the fall. So if you have Moderna, Pfizer, AstraZeneca, if you have companies like that are submitting FDA applications for their vaccine, you are going to get really good action in the markets, and the markets are going to celebrate and rally those FDA applications for the vaccines. Then you're going to have, like I said, the elections that could potentially move markets. So I think in the fall, we'll be back to like regular volatility and regular volume, regular momentum. Kevin Gutierrez, do you think Virgin Galactic stock will keep going down? Man, this stock is so many people want to own this stock because it's cool, but I just think it's just too ahead of its time. Um, if the stock, if this gets back down to 10 or 15 bucks and you want to stash it away in your long-term portfolio, cool. Um, I would rather you own SpaceX when SpaceX goes public. SpaceX does intend on going public. Um, and when SpaceX does go public, like SpaceX, the reason why I like SpaceX so much better than Virgin Galactic, so far, at least to my knowledge, business plan wise, is what's the word I'm looking for? Is not what's the word I'm looking for? It's like retail, you know. It's for like the individual. It's like a leisure activity. SpaceX has commercial use. SpaceX has commercial use. Programs with NASA. Satellites. Like Virgin Galactic is like, okay, you guys want to go and take a ride up into space, for 200,000 a ticket. We can take you up, reach the atmosphere for a couple of minutes, and then come back down to Earth. It's like a carnival ride. To my knowledge, at least, and you guys can correct me if I'm wrong because I'm not completely up to date on Virgin Galactic's business model, but to my knowledge, they don't have commercial use. It's more for like the individual, person rather than commercial use. And SpaceX has that commercial use. And honestly, anything that involves Elon Musk, I want in because I just think that he is just. I think he is so ahead of his time. I think he's the Ben Franklin of our generation. And I think anyone that still bets against that man is a complete jackass at this point. It was cool to bet against Tesla 2 years ago when they weren't profitable, and it was a real concern about, could Tesla be profitable? But if you're still betting against Tesla and you're still betting against Elon Musk and you're still saying it's a car company, you just don't get it. And I think anyone that bets against Tesla is crazy at this point. I've said it openly, and I applauded tremendously when he announced the 5-for-1 stock split. I think that Tesla, after the stock split, is going to perform very well over the next year following the split. So post split, I think 1 year after the split, I think Tesla is up, could be up 20, 25% following that split. The volatility will slow down, but that's not a bad thing, especially if you're looking at for a long-term investment. If you believe in Tesla, you believe in the battery technology, and you believe in the future of that company, the split is a wonderful thing for the average retail investor. So if you want to play the space play, I'd rather see you own SpaceX when it comes public. Virgin Galactic, I think, is more of just like a crapshoot. Like it's kind of like, all right, can the company ever become profitable? I don't know. I feel like it's going to be one of those stories like, well, are they going to be able to turn a profit? I don't know. Uber and Lyft still can't turn a profit, but we're going to send people up into this space ride. How long is that going to take to be profitable? What happens when you get one accident? One accident. All it takes is one accident where something goes wrong, God forbid, and people lose their lives in one of those on one of those trips. What do you think is going to happen to the stock? What do you think is going to happen to their ticket sales on people that are going to ride their? I mean, I just think it's high risk. I think it's just high risk for you guys to like sit in that long term, and that's why I like SpaceX a lot better than I like Virgin Galactic for those reasons. Okay. Okay. Yes. So I just saw Stephen Arbor said, Mike, you going 3 for 3 since you came back in small caps, including the good follow through on Grnq today. Are you inclined to revert back to 25, 50, 25 where my profit tiers or something? Yeah. So that's why I just said that earlier. But I just saw your question now. I'm sure you asked that question probably way before I answered that question. But yes, like I said, I'm back to 25, 50, 25. When looking at charts, what time frame is swing trade and what time frame for 3 to 6 minute period? So Tony, I assume you're saying like what time frame is best to use for swing trading versus what time frame is best to use for day trading. Um, like I said, I use 3, 5, 15 daily and weekly, and I think it should be the same. For swing trading as it is day trading. Like I will use a 5 minute, a 15 minute, and a daily to identify excuse me, to identify a pattern and a setup, right? I'll use the daily chart, the weekly chart to identify patterns and setups, resistance levels, support levels. Then I use the 3-minute chart to really pick my entry. And you can do the same exact thing for swing trading. You can do the exact same thing for swing trading. Yes, Chuck Riggs, I do own mutual funds in my long-term portfolio. Yes, I think it's important in your long-term portfolios. Depending on your investment, goals. I'm young. Okay. I'm a young dude. I'm not retiring anytime soon, so I can take risk. If you're 65 years old, you should not be taking risk. You should be sitting in. So, like right now, yes, I do own mutual funds, but I do own individual stocks as well. I'm very heavy in tech. I've been heavy in tech for the last, I don't know, 5 or 6 years. I've been like overweight tech, and it's paid me very well over the course of that time. I remain overweight tech. I will stay overweight tech. I have no intentions on, I have no intentions on not being overweight tech. But I think it's important for you to have mutual funds, which are more conservative, and then have individual stock exposure as well, and have a nice little balance between those two. If you are, if you have a long time before you're going to be going on a fixed income and you're trying to build wealth, then I think you need to have that balance. But if you are older and you're retired or retiring in the next couple years, you're going to want to scale back that individual stock exposure, and you're going to want to spread your money across mutual funds that hold like 100 different positions, 60 different positions, so that any type of market fluctuation or individual stock fluctuation does not affect the value of your portfolio too much. So yes, you won't take advantage of the 50% gain that you might have in individual stock throughout the course of a couple of months. But if that stock goes down 30% in the matter of a couple of months, you're also not going to be affected. And if you are someone that is towards the end of their careers and you're looking for retirement and going to be on a fixed income, it's important for you to reduce that risk exposure, maybe shift over to some bonds. I would like to see people own bonds. Guys, listen, but again, I'm not a licensed financial advisor. So if you guys are looking for I recommend you guys do seek professional licensed financial advisor advice when it comes to your long-term investments. But I'm just telling you guys, this is what I do. Okay, this is what I do. These are things that I talk to my father about. My father is in his mid 60s or early 60s. So he's coming up on retirement. So these are things that I've been talking to him about, and we've been making some moves with his his holdings, and he's been shifting over to some other things that are less risk adverse. Uh, Adam says your first trade where you exited 2 cents below your entry for small account traders who only have one trade. Should we have waited until the stop loss at 625 to exit, or exit where you did at 670? In that case, Adam, I would stick to your original game plan. I'm maneuvering. Okay, I'm maneuvering, and I can maneuver out of those positions and bend back into them if I need to, because I'm not bound to PDT rule. Okay, but if you only have one trade, then I would just say stick to the original game plan. Be robotic on the trade. Just stick to it. You enter the trade, you got your stop loss, you got your profit targets. I would say just stick to it. Yes, breakout trading. I'm going to. Breakout trading says, Mike, can you talk about the psychology of the KODK spike today? Yes, that's actually the breakout. Read my mind, brother. That's actually the lesson that I'm going to talk to you guys about today. So I think that's enough questions. Okay, that's enough questions. Oh my God, it's 9:20. I can't believe how time flies when I'm answering questions. It's so crazy. I just answered questions for 50 minutes. Wow. Yes, Danny, I'm going to talk about KODK. Yes. So the lesson I want to talk to you guys about today is risk management with KODK. But before I talk about risk management with KODK, let me pull up the KODK chart for you guys. Okay, this is an important lesson. Okay. you guys can see, here's your KODK chart. Okay. That's disgusting. Okay. And inexperienced traders got absolutely crushed on that move. You had inexperienced traders get all their hopes up and were chasing KODK here at $10, $11, $12, $13, only to see the stock within seconds or minutes drop back down to $8, $9. Okay. And a lot of inexperienced traders got their asses completely handed to them on this trade, but not us. Okay. And there's a risk management strategy that I want to talk to you guys about with this particular trade. That's going to be the lesson I'm going to focus on this live stream. Before I do that, I want to recap for you my 2 trades today. So I was 2 for 2 today. I'm now 3 for 3 since I came back from I was sick, like I said, the last week. So I came back. Yesterday was my first full day back. I'm 3 for 3 since I came back, and I want to recap my 2 wins today on MICT and Grnq. Let's talk about MICT first. And like I said, guys, I'm going to recap these 2 trades, and then we're going to talk about the lesson on KODK. All right, I'm just going to take a quick little sip of water. All right, let me pull up my trade executions. Guys, also really cool feature. I mean, obviously, if you're not a TG member, you can't see it. But for those of you that are members, guys, don't forget we've got the trade history feature on our website. So you guys can go back and see everyone's trade percentages, all the moderators. All right, here we go. All right, here we go. All right, got my executions. All right, guys, here we go. Let's talk about MICT. Okay. Now, MICT on the watch list today. Okay, firmly on the watch list. One of the leading gappers here today. I liked what I was seeing here on the daily chart. We were gapping above, okay, this resistance area. Okay, you guys see back here, you got to go all the way back to 2013 and 2014 to see this resistance on the weekly chart on MICT. Okay, so we identified that level as being a potential support level for the stock today. Okay, now look where that line lines up. Are you kidding me? Let's go back to the weekly chart. Let's do this one more time. Okay, this is not a coincidence. Okay, here's your weekly chart. You guys see when I look back to the left, we identify, look at that resistance right there at $6 from 2013 and 2014. You see it right there. Clear as day, guys, right? Clear as day. All right, all the way back, 2013, 2014. Okay, now look at, I'm not going to touch this line. Let's go to the 3-minute chart and let's go intraday. Look where that line lines up. Is that not incredible? 7 years later, is that not incredible? This is how support and resistance levels work. This is basic technical analysis. This is basic charting. Okay? This is how support resistance levels work. Resistance levels, when broken to the upside, tend to become support. So this is what I was looking for to happen for us today. Right off the bell, we gap up above that level. We push higher and halt. We then pull ourselves back in to test where? That $6 level that we just talked about on the weekly chart, going all the way back to 2013, 2014. And then as soon as we double bottomed and tested that area, what happened? We got a nice increase in volume as the stock quickly bounced off that level and shot right back up to where? The high of the day. Okay? We shot right back up to test the high of the day. This action, guys, is a sign of strength. This action is a sign that this level is, in fact, a strong support level. You can trust that level. You can buy in front of it because of how quickly the stock bounced off the level. You see how fast the stock came down, tested the level, and immediately got off of it. That's a sign of strong support. That's a sign of aggressive buying in front of that support level. That's what you want to see when you're buying in front of a support level. You want to see aggressive buying in front of that level. And you can identify aggressive buying by the speed of which the stock gets off that level. The faster the stock gets off that level, the more aggressive the buying is at the support level. Think about what is taking place at that level to cause that price action. Think about it. What is a support level? It's an area where buyers outweigh sellers, plain and simple. And when a stock gets to that level, you want to see the buyers be so aggressive that they're jumping on top of each other to try to buy the stock. That action is going to cause the price of the stock to move higher quickly. That's what you saw here on MICT. So as soon as I saw that on MICT, I go, guys, there's my confirmation of the support level we identified pre-market at $6. We got an increase in volume. This confirms my support level. I'm getting long right now. And I went ahead and I got long right in here as we broke ourselves up over VWAP. Okay, this is my first trade of the day. Okay, I entered this trade at $6.72, looking for a break through the high of the day. We came up, we actually broke the high of the day right there on a big volume bar and rejected aggressively. At this moment, I said, oof, I don't like that high volume rejection. I decided to get flat my position, okay, at $6.70. I literally lost 0.3%, okay? So basically break even. It's 2 cents. It's literally nothing. So it's basically break even at this moment just because I did not like the failed new high and the high volume rejection at the high of the day. So I exited the trade. But what happens next is a very clear sign of support at VWAP. Okay, you guys can see VWAP, VWAP, VWAP support. And as VWAP steps in here as support, I'm now saying to myself, I'm so impressed that VWAP was strong enough to hold the stock up after that failed rejection move at the high of the day, and the trade line was working its way up to give me a trade line VWAP cross that can push us through highs, that I went back into the position at $6.88 right there. Okay, so now I'm back in this trade at $6.88. Looking for a trade line VWAP crossover. You will see that the VWAP held support again. There's another test and hold of VWAP, and there's my trade line VWAP crossover, where the trade line crosses up and over VWAP for the first time on the day, and you can see all hell broke loose once that happened. You got a real strong volume break through the high of the day, and MICT rocketed there up over $8, and I start peeling profits off on this move with we actually halted. No, we actually stayed open at 833. It was so weird at 833. I don't know if you guys were watching the stock today when it broke up there over $8. It got to 833, and it looked like it was going to halt, and they actually stayed open. And the stock ended up starting to pull back in. But I was taking profits off into this breakout move with my best take profit up at $8.33. That is a 21% gain from that re-entry point. So there's your re-entry point. And then there, well, I should draw it out for you. I'll draw it out for you guys, the take profits. I got my trade executions right here. 7. Okay, so we had one right here, another here, and then there. Okay, there are the bulk of my take profits coming off the table, guys. $7.60, $7.97, $8.33. And I held on to one last small piece in case this prior high held. It was like 10% of my position I was holding on to. Once we broke back beneath it, I exited the last piece right there at $6.95. Okay. So there's your take profits on the trade. Here's your entry. Take profit, take profit, take profit, take profit. Okay. And it's all thanks to the analysis pre-market, identifying the support level at 6, identifying the support level at VWAP, the trade line VWAP crossover, and then taking profits once I got my extension move. Okay. And that was my MICT trade. Does anybody have any questions? Okay, does anybody have any questions about this trade specifically, about what I just broke down, about the analysis, the setup, the way that I traded it? Anybody have any questions before I move on to GRNQ? My percent. How many of you guys that are not, how many of you that are not TTG members, how many of you guys find this useful? Sound off, guys. Sound off. How many of you that are not TTG members, if you are not a member, how many of you find this analysis and these recaps and breakdowns? How many of you guys find this educational and useful? Good. Good. Olex, Mr. Newbie, Native Gamer, Dilly Larson, Hot Rod, Average Guy, Alan, Sammy Peter, Fi Hassan. Good, guys. Good. Paulette, Crench, Charles, 88 Lopez, Charles Green, Ali, Zach. Yo, Noble Eagle, what's up, brother? What's up, Noble? I see you, man. I see you. How's your trading going, man? You've been doing all right? I haven't talked to you in a while. Good, good. Rudrow, Simra, good, guys. I'm glad. Good, guys. I'm glad. I'm glad you guys all find this useful. I'm glad you guys all find this useful. Good, good. That's my goal, guys. You know, that's my and Ashley, you're the best. And Ashley goes, I'm a member 1 week. I think it's amazing. I cannot believe you teach so much to anyone that wants to learn. And it's my passion, man. It's my passion. You guys shouldn't have to have Wall Street experience or some Ivy League education to be good at trading or to learn how to trade. It shouldn't have to be that, it shouldn't have to be that. If you have the dedication, the motivation, the desire to learn, I've got the energy and the passion to teach you. I didn't figure this stuff out on my own, guys. I was taught. I didn't just figure this out in my mother's basement. I was taught on Wall Street by professional traders and analysts at a $500 million hedge fund. That I was taught by very successful millionaire traders. I was taught. I didn't just figure this stuff out on my own. So, I'm humble enough to say that if it wasn't for the education and mentorship that I received, that I would not be the trader I am today, which means I obviously would not be as successful that I am today. I wouldn't be living the life that I live today. And I'm humbled enough to say that. And anybody that wants to learn the same education that I learned that got me to where I'm at, I'll share with you guys why. It's not a secret, it's the same stuff that I was taught. If you want to learn, I'll teach you guys everything that I know. I'll teach you guys. That's why I'm on here. That's why I'm on here at 9:30 at night, walking through this stuff with you guys to make sure you understand it all. Kenneth Dixon, does confidence come with experience in regards to waiting for a 3-minute candle to print? I'm from a scalping background and having a hard time staying in a trade for a 3-minute to print. Obviously, yes, Kenneth, confidence will come with experience. The more success you have, obviously, the more confident you're going to be, right? But the more you understand the material, the more you understand the education, the more confident you will also be. And if you come from a scalping background, it's going to take time for you to break those habits. If you're coming from a scalping background and you don't want to be a scalper, but that's how you were initially taught, it's going to take you time to break some of those bad habits, because a lot of those habits are going to get you into a lot of trouble if you're trading on, as a traditional day trader. If scalping is not for you, didn't work for you, and you're trying to trade the way that I trade, you guys, it's going to take time for you to break those habits. And I cover a lot of this in a lot of, you guys would be surprised. A lot of the one-on-ones that I do one-on-ones with our members, like one-on-one mentorship sessions. And you'd be shocked, you'd be surprised, or maybe you're not surprised. I don't know. I'm surprised how many people have started their trading careers learning from some type of a scalping style or a scalping mentality where they're in and they're out within seconds. I'm like, it's crazy, and a lot of people have a hard time breaking some of those bad habits. I've got some specific rules and some things that you can implement in your trading that can help you break those bad habits. Maybe that's a lesson I can talk about on a different live stream, because it'll take up probably several hours just by me going through with you guys some lessons that can help you break out of a scalper's mentality and a scalper's style. But yeah, that's stuff that I cover in a lot of my one-on-ones. It's stuff I cover in a lot of my one-on-ones, is breaking those scalping habits. No, McGear Garrettson, no, you do not need to sell your Tesla shares before it splits. No, 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 no. No, McGear, if you have one share of Tesla right now, after the stock splits, you will have 5. You will have 5. No, please do not. You do not need to sell. You do not need to sell your share. Yeah, Flip, that does sound like a good topic for Trader Palooza. That is something maybe we can talk about for Trader Palooza. Jim Peterson, you're the king, bro. Thank you for that. Thank you for saying that. Thank you, Jim. I really appreciate those kind words. Jim says, for anyone new who was on the fence, you will not find a group of people who genuinely care more about your success than here. Their integrity is next to none. Jim, thank you, man. I really do appreciate that. It really means a lot to me. Good question. Monk 3D, good question. It influenced it a lot. So guys, Monk 3D says, Mike, how did the low volume bar at 9:45 influence your decision making? And it influenced it a lot, because we had this pullback coming out of the trading halt, but the volume was light on the pullback coming out of that trading halt. We came in to test the $6 level. That was the support level we were looking to hold pre-market. And then as soon as we bounce off that level, look at the difference in volume. That's what gave me the indication to buy this stock. That was my signal. This is what I teach my TeachD members. You see, guys, see the low volume pullback into that support level? That low volume pullback is a signal of profit taking, not aggressive selling pressure. So as soon as that stock pulled into that level, held the support level we talked about pre-market, and bang, popped right off that support level with an increase in volume. Look at the volume difference. It is night and day. That volume surge off of that support level is what said to me, there's my confirmation that I can trust this support level. I can go ahead and I can now get long this stock and bang, catch that move. So yes, Monk 3D, excellent question. I'm glad you asked it, because yes, it absolutely affected my decision making. I'm pulling the trigger there when I did. All right. Samir, how long have you been doing the trading? I've been trading now for 16 years. Alan LaFon says, what's your trade line? Is it an EMA? Yes, Alan, it is. My trade line is the 9 exponential moving average. Okay? My trade line is the 9 exponential moving average. Important to note, my trade line and my VWAP indicators, I do not include pre-market data. If you do, yours will be different than mine. Ezra Adams says, I want to learn how to do this. So good. Ezra, you're in the right place. You're in the right place. Andrew, you guys are the best, man. You guys are making me blush. You guys are making me blush. Andrew says, Jim Peterson, I couldn't agree more. The passion, Mike, and the dedication of all the other mods blew me away, and I became a member after my first Tuesday after convincing my wife. Yes, and made my membership fee back in 2.5 days. Yes, Andrew. I bet that felt good, right? I bet after you made your membership fee back in 2 days, you probably walked up to your wife and were like, so, honey. Like, oh, that's awesome. Noble says, do you ever put an average on your volume intraday? Do you ever put an average on your volume intraday? Noble, what do you mean by that? What do you mean? Do I ever put an average on my volume? Like a moving average for my volume bars? Is that what you're asking? Like to have a moving average, like almost like a VWAP, but for your actual volume bars? Is that what you're asking me? Like a moving volume average to see if like volume is increasing or decreasing throughout the course of the day? Yeah, okay. Um, I don't. I don't really. I don't. No particular reason. Um, I don't. You know, I'm real big. I'm real big on volume, but I'm not as concerned with like the average volume of the day as I am concerned with volume at specific moments during the day. Like a huge part for me, and Noble, I know you're a very experienced trader as well. You and I have had a lot of dialogue over the last several months. Um, but like for me, my volume analysis for me is huge. Like if there was one indicator that I can trade with throughout the course of the day, it would be volume. If someone said, Mike, you can trade today, but you can only use one indicator, it'd be volume hands down. I think volume gives you the most insight into a stock's strength, weakness, momentum, whatever it is. But for me, a major part of my technical analysis is understanding volume increases and decreases at certain moments of price action. So I'm not necessarily as concerned with the average volume throughout the course of the day as I am more concerned with volume increases and decreases during specific moments of price action that can give me some more detailed information on what's taking place at that moment in time and what levels are strong, what levels are weak, where there's aggressive either buying or selling, and where there's like passive selling or buying. So that's the only reason why I don't use average volume. I'm not sure if you do, but it's not something that I really use. I am Curtsy says, how long do you like to wait to get into a stock when the market opens? I usually don't trade within the first 5 minutes of the day. Sometimes I might go a half hour, 45 minutes, an hour before I make my first trade. It depends on the day. I do not chase opening bell momentum. I wait for patterns. I wait for setups. If you're buying a stock in the first 1 or 2 minutes of the day, you don't have enough information to really gauge if a stock is strong or weak. You're chasing opening bell momentum, and the only traders that should be chasing opening bell momentum are scalpers. And those are traders that are looking to get in and out within seconds. I am not a scalper. I do not get in and out within seconds. Therefore, I will not be taking part in the first couple minutes of the day. Every single candle that a stock puts in during the day, whether it's volume or price action candle, is more data that you can add to your analysis to make a decision if a stock is strong or weak. So the first 1 or 2 minutes of the day, you do not have enough data. You don't have enough information to make that call. So I wait for patterns. I wait for setups. I can clearly identify my risk. And when those windows of opportunity present themselves, I attack. So that's why I will usually wait at least the first 5 minutes of the day. Sometimes I can go a half hour before I make my first trade. It just depends on the day. Alex says, why do you not include pre-market? I never heard of that. The reason why I don't include pre-market in my VWAP and my trade line indicators is because you guys have to understand that VWAP is a N9. They're all lag indicators. Okay. They're all lag indicators. The more data points that are added to the equation that makes up your VWAP and trade line indicator, the greater the lag. That's why you never use VWAP over multiple days. VWAP is specifically an intraday pattern or an intraday indicator, excuse me. You're not going to look at a rolling 1 month VWAP. Okay, you don't do that. It'll never work because every single data point that's added to the equation of a VWAP indicator is going to further add to the lag. That's why you guys will see a lot of times, like in the morning, you can have VWAP be so significant in a stock's price action, but by the afternoon, the stock is so far away from its VWAP indicator because the longer that the day goes on, the more data points that are added to that equation, which is each individual trade that gets added to the equation of VWAP, the greater the lag is going to be. So if every single piece of data is going to create a bigger lag on my indicator, I want my indicator to be compiled of data that's from 100% of market participants. Pre-market is a fraction of market participants. 100% of market participants are not trading pre-market. That's why you can have a stock that just does this pre-market, and as soon as the bell rings, it just gets slaughtered. Explain that. How does it just happened yesterday or Friday? I think the stock began with an E. I forgot the ticker. Whatever, it doesn't matter. I forgot the ticker. But the stock went from like $3 to $9 pre-market. And as soon as the bell rung at like $8, it just dropped to $5 and was dead the whole day. I think it was yesterday. I forgot the ticker. But whatever, it doesn't matter. It doesn't matter the ticker. So I want my indicators to be calculated based on 100% market participants. And therefore, I want it to be the most relevant during that time. That's why look at how significant my indicators are. Like, look at how VWAP is sitting here holding support. Look at how the trade line, as soon as the trade line crosses over, you get the move. Okay. You guys see that? So I want my indicators to be as fresh as they can, knowing that these are lag indicators and you're never going to use VWAP longer than one day. All right, so that's why I don't use pre-market analysis. I don't use pre-market data in my indicators. Listen, guys, it works for me. It may not be for everyone, but it works for me, and that's the reason why. All right, now let's go to, yes, Avi Vaknin. Avi Vaknin made my membership 10 times over in just 1 month. Hell yeah, Avi. Hell yeah. Congratulations. Made back 10 times your membership in just 1 month. Avi, great job. Wow. Boom. Yeah, that deserves a boom. Nice job. Hell yeah. All right, guys, let's get to my next trade. Grnq. This is a smaller win. This was a smaller win. This wasn't, I'm just adding to my day here. It wasn't anything crazy. Okay. So here you guys have Grnq, and what I want you guys to notice, Grnq had this big strong move off the open. We halted. You had the pullback, whatever. We settled down, and then now here you guys can see we got resistance there at VWAP. There's bang, resistance there at VWAP, but we were holding support. Okay, we were holding support right at your 50 Fibonacci level. Okay. So here's your 50 Fibonacci level holding the stock together while we sit here and we fight against VWAP. VWAP resistance, 50 Fib potential support level. What caught my attention on this stock was once we broke our head back over VWAP, okay, notice the increase in volume as we pop our head over VWAP. Now, that increase in volume over VWAP puts the trade line in play. The trade line was not in play prior to this move, okay? But now that we're above VWAP, with the increase in volume here, you have the chance of a trade line VWAP crossover as the trade line crosses over VWAP for the very first time during the day. So once the stock broke over VWAP, I told everybody in chat, members that are on the live stream right now, you guys can confirm this. As soon as we popped our head over VWAP with an increase in volume, I said, guys, I'm looking for a pullback and test of VWAP. I'm a buyer down there in front of VWAP. What happens? We get our pullback right down to where? Bang, there's your VWAP test. VWAP was previously resistance. We broke through it with an increase in volume. The trade line came up into play, gave us a trade line VWAP cross, and I got long right there. back to my trade confirmations. Right there, I'm long at $1.71 in front of VWAP. I'm long right there at $1.71. Okay, looking to take profits in front of the high of the day. Guys, $2 was a major resistance level on GRNQ. Okay, if you guys go back to the daily chart, you'll see a major resistance level there on the daily, but it was also the current high of the day. So once we got up there, I said, okay, I'm taking profits in front of that high. What did I do? Right there, bang, took some profits off the table at $1.92. Okay, took profits at $1.92. Then we get stuffed and kind of form this double top here. And I said, okay, guys, you know what? I'm like, that was a pretty aggressive rejection there at the high. I was like, I don't want to get caught in a double top. Lunchtime was going to be coming up here pretty soon. I'm like, let me just lighten my position a little bit more. And I took more profit off the table right there in front of that high just to play it safe. Once we had that rejection, we bounced up. I took some profits and I said, I'm going to hold on to one last piece. And I'm holding on to one last piece. And then right here, I actually got stopped out of my last piece right there, which actually sucks because the stock ended up going much higher. But I'm walking away from the trade with some nice gains. Okay, walking away from the trade with some nice gains. All right. So again, here's the entry. Here's your take profits, and the stock ended up going much higher. Broke out during lunchtime and then gave you that squeeze, and the stock got slaughtered at the end of the day. Absolutely slaughtered at the end of the day. So as you guys can see, I left a ton of money on the table on this GRNQ trade. But I mean, listen, I'm honestly okay with it. I made the bulk of my money in MICT, and I added just a little bit of money here on GRNQ. You're looking at like 12% on the first take profit, 6% on the second take profit. Nothing really to write home about. Was not a home run trade by any means. But I'm just adding to my day. I had a good day with MICT, and I said I'm going to add to my day here with GRNQ, and then that was it. And that was it. And then I missed this rally here. Why didn't I get back in? I honestly, I didn't trust it, to be honest with you, D. Lee. I didn't trust it. D. Lee, it was lunchtime. It was 12:30. The volume was not that strong. Like the volume on these new highs were not that strong. Like, if you guys look at, your volume bars, here was kind of your heaviest volume of the day, and we failed at the high. Then we printed a new high, and the volume still wasn't that great. Then we printed a new high right here again, and the volume was actually really crappy when we made that new high. And then all of a sudden, we just kind of had that squeeze move. So I did not trust this. The volume for me was just a little light during the lunchtime session for me to really have confidence and follow through. And I just had a hard time entering the trade up in here because I'm like, the volume's really not that great. I really feel like I'm chasing this a little bit. I didn't like the risk reward on the trade setup. It just really wasn't a setup that I was comfortable with. So I just stayed away from it. I did not trade it. And you guys have to realize, just because the stock goes up doesn't necessarily mean that it's a good trade. I say it all the time to people, like, your job is not to catch every stock that moves higher. Your job is to identify high probability patterns with good risk reward that you like, and you put yourself in those situations and you execute on your game plan. I was not comfortable with the setup on GRNQ going forward. I didn't like the volume. The volume did not give me confirmation or give me confidence in that setup, especially being that it was lunchtime. Now, if it was like 10:30 in the morning, maybe I would have felt different about it, but it was 12:30. We just got into lunchtime. 12:30, 1 o'clock. That's right dead smack in the middle of lunchtime, and stocks tend to trade with less volume during lunchtime. Sometimes you get the breakouts and the follow throughs, as you saw in GRNQ, but the majority of the time, the stocks will fail more often than they'll give you the follow through unless they have that real strong volume. And I didn't see that real strong volume, so I did not re-enter this trade. Okay. Lucio Mendoza says, Mike, where do you start your fib levels? Is it from the low of the day or from the opening bell? So your Fibonacci levels, guys, are going to be anchored from one of two places, whichever price is lower. Okay, you're going to anchor your Fibonacci's from the prior day's close or the current intraday low. Again, you're either going to start your Fibonacci from the prior day's close or the current intraday low, whichever is lower. So if a stock closed at $5, then gapped up to $6, pulled into $5.50, and then broke out to $7, and you're trying to identify your Fibonacci levels, you're going to draw your Fibonacci level from that prior day's close at what I just say, $5, okay, and then up to the current high. Now, if the stock closed at $5 yesterday, opens at 550, drops to 475, then rallies to 6, and you want to enjoy your Fibonacci levels, you're going to enjoy your Fibonacci levels from 475 because the low of the day is lower than the prior day's close. Okay, so that's how you guys will anchor your Fibonacci retracement levels. Does anybody have any questions about specifically the GRNQ trade that I just explained to you guys? Yeah, I have, Mr. Newbie. I have gone long and short a stock in the same day. I have. I don't do it often, but I mean, I have. All right, so no questions about GRNQ specifically. Okay. All right, so no questions about this specifically. Good. All right, so that was my GRNQ trade. That was, the MICT trade. Now I want to talk to you guys. I want to go over a lesson with you guys real quick. All right, I want to go over a lesson with you guys on risk management. All right, I want to cover with you guys a lesson on risk management with regards to KODK. All right, because this was a lesson that I really wanted to go over with you guys because this saved how many of my TTG members, if you are a TTG member, how many of you saved money today by my analysis on KODK? When I was on the microphone today talking to you guys about KODK, how many of you were considering buying this? How many of you did I save you guys money with the risk management lesson that I talked about in chat? Good. Good. The Nick, Tony says, yep, totally. I wasn't, yep, Mike, I wasn't touching it. Ender says, yep, me. Jorge, me. Jersey Devil. Mitma. And Ashley said, I was considering it. Michael, Art. Beautiful. Beautiful. Good. That's what I'm talking about, guys. That's what I'm talking about. I'm happy. I really am. I'm happy to see that. So let's talk about this real quick, guys. KODK. I think it was like a news headline that came out that they were like going to be cleared of the investigation with like insider trading and the SEC's looking into them, and it was the company's a mess. The whole situation's a mess. But this stock, once that news broke, this stock just took off and was just halting every couple seconds. I'm gonna actually go to one. I'm gonna go to 1 minute chart just to show you guys how fast this. I'm only on a 1 minute chart right now just because I want to show you how fast the stock was halting. Okay, that's why the only reason why I'm on a 1 minute chart right now. Oh, what tick? Does it even have? Does it have less? Ooh, let me see this. Oh no. I was gonna see if I can even go to like a different time frame. I'm gonna go back to 1 minute so I can show you guys. All right, so these are 1 minute candles. So right here is when the news came out. Right, stock halted. Nothing you can do about that. No way anyone's buying that because the news came out and the stock halted. Okay, this is a 1 minute candle. As soon as the stock reopened for trade, it opened for about 15 seconds and halted again. Okay, at this moment, I said to everybody in chat, I go, guys, please be careful with KODK because it's halting within seconds. It's not halting within minutes. It's halting within seconds. If you are not lightning fast to get in and out of this trade, do not put yourself in this position. It's too risky. Do not chase this momentum. If the stock is truly strong and it's going to give us a move higher, it will give us a setup and a pattern that we can buy. I'm not going to chase this momentum. It's extremely dangerous. You have absolutely no idea where your risk is. You don't know where your stop loss is, and this stock can halt and then gap down on you $2, and you'll be sitting there like a deer in headlights, not knowing what the hell just happened. This is the perfect example of why. This is the perfect example. This is the perfect example of why I do not chase momentum. Okay, this is the perfect example of why I do not chase momentum when I wait for setups. So what happens when the stock halted? We opened up again within seconds, and I mean seconds, guys. This was maybe 20 seconds. The stock was open and then halted again. Everybody's getting very excited at this moment because the stock has just gone from $9 to $13 in literally 45 seconds of actual trading. So everyone's getting very excited at this moment. I'm saying, guys, please be careful. Do not chase this thing coming out of the halts because you can get crushed. And what happens right as we come out of the halt? We come out of the halt, we flush again within 15, 20 seconds. We halt again, and then the second time coming out of that halt, massive gap down to $10. Again, only open for a couple of seconds, and then the stock reopens for trade, and then finally settles itself in below $10. And if you were chasing this stock in here, you got destroyed. Okay? I know it's very exciting when you see a stock making moves like this, but when the stock is halted longer than it's actually open for trade, you run a major risk of getting caught in some pretty nasty pullbacks and some pretty nasty action. Okay? So this is just another example and another lesson on why you guys need to be aware of these type of situations. Do not chase that momentum on the way up. Stay patient, wait for patterns, wait for setups, and keep yourself away from high risk situations like this where you can really do yourself some serious damage. How upset would you be if you bought KODK right there only to stop out right there because you couldn't get out in those halts because it halted too quickly for you, and you just gave back all the money you made in MICT, all the money you made in Grnq, and you are now red on the day because you just got crushed? How upsetting would that be for you? Do not put yourself in situations like this, guys. It's just simply not worth it. Anybody have any questions about KODK? Oh, good. D. Lee Larson. Good. I mean, you said you got out when you did. Good. Good. Okay, good. All right, good guys. So no more questions. No more questions there on KODK. All right, excellent. You guys, this was helpful, guys. This was helpful, like the trade recaps, the trade breakdowns, MICT, GRNQ, KODK. I hope this was all helpful for you guys. Real quick, what I want to do right now is I want to invite you guys to something that I'm doing tomorrow that is an absolute must. How many of you right now, by a show of hands, how many of you right now are trading with a small account? And by small account, I mean an account with less than $25,000 in it. How many of you are trading with a small account with less than $25,000 in the account? Show of hands, how many of you have less than 25 grand in your trading account? All right. That's a lot of you. That's a lot of you. I can't even read your names out because they're coming through so quickly. Okay. So look how many of you have a small account. Okay. Look how many of you have a small account. So what I'm doing, okay. Wow, you guys it's still going. There are still people going. Yes, Sean. Yes, my man. Sean Miller says not for long. Yes. Woo! Yes. Says not for long. Yes, Sean. Guys, Sean Miller, I always talk about Sean. Guys, Sean started with $500. Within like 3 months, he turned it into $5,000. And he's well on his way. He's well on his way to getting out of the PDT rule. Good stuff, guys. Listen, okay. The reason why I asked you guys that question, okay, is because a lot of people, most traders, most beginner traders have less than 25K in their accounts. Okay, most people, right? Most people start small. They start with $500, $1,000, $5,000, $2,500. They start small and they try to work themselves up. They try to grow their accounts bigger. So, what I am doing for the very first time, this is the first time I've ever done this. Tomorrow, from 5 p.m. to 7 p.m. Eastern, I am hosting a how to grow a small account workshop from 5 p.m. to 7 p.m. where I'm going to discuss with you guys rules, risk management, strategies, styles, stocks you should be trading, stocks you should be staying away from, options you can be trading, options you should be staying away from, which will give you the best possible chance to grow a $500 account to a $25,000 account. This is the very first time that I'm doing this. There are very specific rules, discipline, strategies, risk management that I think are crucial and critical to, and also psychological aspects like the state of mind, your thought process, your mental approach to trading with a small account is different than a mental approach trading with several $100,000 in your account. It is a different approach. There's different risk management. There's different limitations that you have, and you need to be able to work around them and deal with them and to be able to work your way towards growing that account to where you can get yourself out of that PDT rule and that $25,000 mark. This is the very first time that I'm doing this. Every single one of my TTG members are invited. It will be held in the TTG chat room from 5 p.m. to 7 p.m. Eastern. I've got an entire PowerPoint that I'm going to be breaking down with you guys to share with you all of these crucial lessons that I think are vital for traders specifically that have small accounts. Everyone that is a TTG member is invited to this event. It is a members only event. Okay? It is a members only event. So for all of you that are not TTG members that just raise your hands, if you guys have a couple $1,000 or a couple $100 in your trading account and you don't know what to do, you're not sure, you're struggling trying to grow the account, you're not sure what you should be trading, you're not sure when to trade, when to not trade, what setup do I go after, what setup do I wait out because I'm under PDT rule or I don't have cash cleared in my account, and you're struggling with growing that account. Tomorrow, I'm going to show you specific lessons and risk and all these different things about trading with a small account that's going to help you grow that account to over 25K. That's what I'm doing tomorrow from 5 to 7. If you are not a THD member and you want to join me on that event, I'm giving you the opportunity to right now at a 37% discount on the 1-year all-inclusive membership to TTG. It is a members-only event. Again, it's a members-only event. I'm sure we're going to have hundreds of my THD fam are going to be joining me on this workshop live tomorrow. If you guys want to join me for it, sign up to TTG. Use the coupon code TTG820. That coupon code is going to give you guys a 37% discount for being part of my TTG YouTube fam. A regular 1-year membership, guys, costs over $2,000. It's $2,048 for a 1-year membership. That coupon code gives you the membership for $1,287. Okay, that is a 37% discount. Take advantage of that coupon code because prices are going up on Friday. Okay, we're going to be raising our prices on Friday because we are continuously adding new features. I have been on these live streams before and I've told you prices are going up. In June, I told you prices were going up. If you didn't listen, prices went up. I told you in July, prices are going up. If you didn't listen, prices went up. I told you for August, prices were going up. You didn't listen, prices went up. In July, you could have joined for 1160 or 1165. Okay, in July, or 1189, whatever it was. Now it's 1287. I'm telling you guys again, prices are going to go up. Why? Because we have just added a real-time news feed with MT Pro Newswire with a deal that we signed with NASDAQ.com. Okay, so members now in chat have a live news feed that gets pulled directly from NASDAQ.com. That costs us money. So this is why we are going to be raising our prices. We're also working on a real-time charting software similar to TC2000. Let me give you guys some insight and put this into perspective for you. Okay, for $1,287, let me put this into perspective for you. Let me show you guys what I pay for the MT Pro feed. Here you guys can see right here, live briefs by MT Newswire. This is the Newswire service that we now have included in the TTG chat room for all of our members. It cost me with TC2000 $50 a month. That is $600 a year that I pay just for that news feed. You now have that news feed included for free with your membership. If you take that out of your membership price, because that's what it's going to cost you if you get it elsewhere, now your membership is $687 for the year. And what are you getting for that $687 for the year? You're getting access to the daily chat room where you guys see my screen, hear me on the mic every single day, breaking down my analysis. You guys wanted to be in that MICT trade. You wanted to be in that Grnq trade. You wanted me to save your ass from getting smoked on the KODK trade. Be in chat with me in real time during the day because I tell you guys what I'm buying, what I'm selling before I buy and before I sell. You guys get access to all the trade alerts from all the moderators. Okay, we have moderators that specialize in certain things. Okay, you have, like I said, Jay Downing that specializes strictly in swing trading for people that work 9-to-5 jobs. We've got Chris Toner, who's an options guru who has 20 years, okay, to over 2 decades of option trading experience. We've got Jason Spatafora, the Wolf of Wheat Street. Many of you know him and his large cap options and his cannabis stock plays. You've got Alex Campbell, our small cap aggressive scalper kind of style trader who also trades crypto. We've got stuff and traders and moderators for all different types of styles and trading strategies in the TG chat room. There's something there for everybody. Then you guys obviously have me, which I day trade, I swing trade, I trade options, I do everything. I don't trade crypto or Forex. Other than that, I trade everything. Okay, so you guys can follow along with the trade alerts from all the moderators. You guys get access to our mobile app that's downloadable on iPhone and Android. You guys can follow along with what we're doing in chat, the screen share, the audio analysis, and get real-time push notifications whenever a mod enters or exits a trade. So that if you're at work, you're in the car, you're sitting in traffic, you're at the mall, you're on the golf course, you're at the gym, whatever you're doing, you can follow along with what we're doing in chat, and you guys can actually place trades because you're getting real-time push notifications on all of those trade alerts. And since I am not a scalper, it's easy for you guys to follow along with those trades. On top of that, you're getting the entire TTG curriculum. Guys, the curriculum, all of my courses, this is the exact same information I learned working at a hedge fund. Understand, the 3 months of the educational program I went through, I have simplified that material and I've created the curriculum on True Trading Group. All of it is included. There are no upsells. There's no beginner package, VIP package, special inner circle package. There is one program. When you guys join TTG, you get access to everything we have to offer. It's like Netflix. Okay, I say it all the time. We are the Netflix of trading communities because you get everything for one price. When you guys join Netflix, they come out with a new documentary next month. They don't ask you for $20 to watch the documentary. It's included. When we come out with new courses, new resources, new tools, it's automatically included in your membership. Like the news feed that we just added. That news feed, none of our members have to pay for that. It's included in your membership, but that's why our prices are going up moving forward. Okay, that's why our prices are going up moving forward. You guys get access to the entire curriculum. We've got beginner stock trading and beginner and foundation stock trading courses, advanced stock trading courses, beginner options trading, advanced options trading, trader psychology part 1, trader psychology part 2. Okay, how to trade a stock market crash. We have our new tax course. Okay, we've got our new tax course where people that, if we had a CPA put together a tax course for you. All right, we're working on a new swing trading course. All of this is included with your membership. You guys get access to our trade simulator. You can practice trading stocks and options with real-time level 1, real-time level 2, okay, and implement what you're learning in the courses. That's included. Our stock screener, you guys can filter through all the stocks that are in the market that meet specific criteria so you know where to focus your attention, what stocks are hot for the day. Our TeachD forum, you can keep the conversation going with different topics with moderators and members on our TeachD forum. Our premium blog that's updated daily with trade ideas, trade recaps, general market commentary. All of this is included for that one price, that one membership price of TTG820. Use that coupon code, get a 37% discount. Join me on this class tomorrow on how to grow a small account. And anybody that signs up tonight by midnight, you are going to get access to a one-on-one mentor session with any one of the moderators that you choose. I suggest when you guys become members, spend some time in chat, get familiar with the moderators, see which moderator best fits your trading style. If you work a 9 to 5 and you're trying to swing trade, Jay Downing is going to be the guy that you're going to want to talk to. If you're really interested in cannabis stocks and sin stocks and the psychedelics, and Jason Spatafor is the guy you're going to want to talk to. If you're interested in crypto, Alex Campbell's the guy you're going to want to talk to. If you're interested in traditional day trading, I'm the guy that you're going to want to talk to. Get familiar with the moderators that are in chat. You can do a one-on-one mentor session with any one of the moderators that you choose if you sign up tonight before midnight. Think about what I am saying to you. For $1,287, you guys are getting access to everything that I just said to you. If you take away just the $600 a year that I pay for that MT Pro newsfeed, you're getting that included in your membership. So there's $600 right there, bang, off. Because you're getting that value in your membership, okay? So for $687 that's left in your membership payment, look at what you're getting access to. Just my webinar class tomorrow, I can probably come on YouTube, guys, and be like, hey, guys, I'm doing a class tomorrow on how to grow a small account. I'm charging $200. I can probably get 1,000 people on YouTube that'll sign up for that right now. But I'm not doing that. It's for my members only, okay? This is for my TeachD family only, for members only, okay? We are constantly holding webinars and workshops. We just did a swing trading workshop last week. The Wolf just did a cannabis and sin stock workshop. We just did a red to green workshop. I mean, we have so many workshops and webinars that we're constantly doing for all of our members. You have access to all of them as a member, all of them. That alone is worth the membership. The courses, the material that I learned working at the hedge fund, that alone is worth the membership. Okay, but all of this is included in your membership. Why? Because I want to make sure that you have access to every single resource and tool necessary to help you become a consistently profitable trader. I'm not going to sit here and say, hey guys, come join True Trading Group, and then you join and then you sign up and you're like, what the hell? I only have access to 3 courses. What about the other 10? And I'm like, oh, well, that's the VIP package. Why would someone do that to you? Think about the mentality. Why would somebody offer you? Why would they not give you everything all at once? Why? So basically I'm saying this is the education, guys, that you need to be consistently profitable. And education you need to be profitable. But here, Professor Sadie's book, the quiz is on all 30 chapters. That's the professor setting you up to fail. Why would they not give you access to all the information? You get access to every single resource, tool, educational piece of content, course, you name it. Everything that we have available is at your fingertips. There are no upsells ever. And anybody that's going to say, oh, well, here's my beginner program. Well, here's my special VIP program. Well, here's my special VVIP program. And they're going to charge you more money for every single one of those programs. They're just upselling you. Why not give it to you all up front in the beginning? If they really cared about your success and they wanted you to become a better trader, why not give it to you in the beginning? Ask yourself that question. How many of you have paid for a program in the past that did not give you every single resource that they had available? How many of you had to pay extra to get an extra resource or extra course? That's bullshit. If you guys make the decision to join the TeachD family and you are dedicated, motivated, and are ready to do this, I'm ready to give you every single thing that I have to help you guys achieve your goals. And I promise to be there with you every single step of the way. We have surveyed TTG members in chat multiple times, and these are real statistics that we have surveyed members in chat. 80% of our TTG members make back 7 to 10 times their membership fee within the first 6 months of their membership. 80%, 25% of them make it back within the first 30 days. Now, that still means 20% are struggling a little bit. And we have red to green workshops for those 20% because we leave no trader behind. I'm not sitting here saying, guys, join TTG, you're going to become millionaires. I'm not saying that. Join TTG, you have an 80% chance of making back 7 to 10 times your membership fee within the first 6 months because those are the stats that our TTG members are doing. And if you fall in that 20%, don't worry about it. We leave no trader behind. We have a red to green workshop where we specifically work hands-on with traders that are still struggling after going through the courses. After getting TeachD certified, that means you completed all the quizzes at the end of the exams. At the end of the courses, you passed all the exams. That means you're TeachD certified. If you do that and you are still struggling, we work with you hands-on to help you turn things around and to see get you back on track and help to get you back towards the green level. Okay, we leave no one behind. So if I had said to you guys, are you willing to invest $1,287 in yourself to get a professional Wall Street hedge fund education? Okay, get access to all the resources and tools that I just laid out for you and explained to you. If you knew there was an 80% chance that you were going to make back 7 to 10 times that membership fee within the next 6 months, would you do that? That comes out between $9,000 and $13,000. If I said, okay, let's go to Las Vegas, take $1,287, and I said there's an 80% chance that it's going to come out black, would you put $1,287 on black if you had a chance to make $9,000 to $13,000, if you had an 80% chance to make 9 to 13 grand, would you do it? That's what it comes down to. Ask yourself that question. Would you do it? And anyone that signs up, okay, anyone that signs up will also get access to a free one-on-one mentorship session with any one of the moderators that you guys choose. Prices are going to be going up on Friday, guys. I'm telling you guys this now. I already had a conversation with my partner. You guys know Adam. You guys, TGD members, you guys know him. We're looking to raise those prices on Friday because we're implementing all these new features. We're incurring these costs. I don't mind incurring these costs. We are constantly reinvesting back into the platform. That's why we have all these amazing tools and resources for you. And we're just going to keep building. We're going to keep adding more resources and adding more tools. But to do that, our prices are going to be going up. If you guys join tonight for $1,287, you are locked in at that price. So let's say next year, okay, when it's come times for your membership to renew, let's say the best discount code we've got is for $1,700 or $1,800. When your membership renews, you don't have to pay that. You pay the $1,287 that you pay today. So you are grandfathered in at the price you pay today for life. Okay? Then we also have a lifetime membership that if you ever want to upgrade to at any time, you can upgrade to and just pay the difference. You don't have to buy a full lifetime membership again. You just pay the difference between the 1 year and the lifetime membership. If you are interested in a lifetime membership, I also highly recommend you guys act on that and you upgrade. Send an email to info@truetradinggroup.com if you're interested in the lifetime membership, because those prices are also going up on Friday. We're going to be raising our 1 year membership and our lifetime membership. We are going to be raising at the end of the week. So you guys have till the end of the week to get that, to lock in that price point, but you only have until tonight to sign up, get the one-on-one mentorship session, and then join me tomorrow in the How to Grow a Small Account workshop, where for 2 hours, I'm going to be going through with you guys important lessons and risk management strategies, mental discipline, psychological mindset that I think is required for a trader to go from 500 to 25,000. Okay. So that's what it comes down to, guys. You have to ask yourself, are you willing to place the bet? Are you willing to invest in yourself to get a professional education, knowing you've got an 80% chance of making back 7 to 10 times your membership fee in 6 months? That's what it comes down to. Okay. So ask yourself that, guys. Ask yourself that question. Use that coupon code, guys, TTG820. Lock in that price before prices go up. Join me on this class tomorrow where we're going to be talking about how to grow a small account. I'm excited to see all of you guys in there. If anybody has any questions about memberships, you can send an email to info@truetradinggroup.com. Click on the link in chat that we are posting throughout this video and use coupon code TTG820 to get that discount. Schedule your one-on-one with any moderator that you guys want and join me tomorrow for that special workshop, how to grow a small account. All right. So that's it, guys. Anybody have any questions about memberships before we go? Anybody have any questions about memberships? And again, if you guys want to upgrade to a lifetime membership, send an email to info@truetradinggroup.com. Yes, Danny! Danny Brew! Yes, brother. I'll see you in chat, man. I'm pumped, Danny. Danny, I'm pumped, man. I'm excited. I'm excited for you, Danny. I'll see you in chat, man. Hell yeah. Hell yeah. Awesome. Beautiful. Yes, Danny. Yes. Danny, send me a DM tomorrow when you're in chat. I'll look for your name, but if you change I don't know if your username is going to be Danny Brew like it is on YouTube, but I'll be looking for you in chat tomorrow, bro. Breakout trading. I'll see you tomorrow, brother. Have a great night. All right. Take care. Smoke later. Kenneth Dabrowski later. Andrew later. Wallace, Joseph. I'll see you guys all later. I hope you all have a wonderful night. I hope this was a helpful and educational stream. I hope you guys learned something about those 2 trade recaps. I hope you guys learned something about that KODK risk management trade. I'll see you guys all in chat tomorrow. I'm going to look to keep this little streak going. I'm 3 for 3 since I came back from being sick. I'm going to look to keep that momentum going. And I will see you guys in my workshop tomorrow. We're going to talk about how to grow a small account, go from $500 to 25,000. I'm going to talk to you guys. I'm going to show you guys how to do that tomorrow night. So use that coupon code TTG820. Get that 37% discount. Get the one-on-one, and I'll see you guys in the workshop tomorrow. Have a great night. I'm going to get some rest. I'm going to get some sleep. I'll see you guys bright and early. I'm going to look to kick some ass and take some names. Take care, guys. It was a blast. Another successful one in the books. If you have not done so already, smash that like button. If you're new to the channel, subscribe. Hit that notification bell. Make sure you guys don't miss out on any more of these live streams and educational videos of content.